Well, good afternoon and welcome to Pay Entry's weekly webinar. Today we're going to be talking about the top 10 mistakes that employers make when it comes to wage and hour issues. My name's Kathy Graham and I'm head of the HR Services Division of Pay Entry. I want to welcome you today. Before we get started, just to let you know, this session is being recorded and will be available after on our website. But if you did register for this, you will get a copy of it by email. Also, to let you know, our webinars are intended for educational purposes only. While it would be nice if I were an attorney, this webinar is not to provide legal advice. It is mainly to give you an overview of some of the laws and how employers deal with them. We will have a Q&A session at the end, and there's a questions box on your screen. If you want to type your questions in as you go along, you're welcome to do so, and we'll answer them at the end. Okay, so let's look at the top 10 wage and hour mistakes. First of all, who governs wage and hour issues? And we're going to talk about that. We're also going to talk about what is the FLSA, what are the top 10 mistakes, and how to avoid the penalties. We like to keep our webinars to 30 minutes and under. So today we're going to do highlights. If you need any in-depth information on any of the subjects that we talk about today, just shoot me an email after this is over and I will send you information that has more detail in it on the law that you're questioning. But please feel free to ask questions today during the session. Okay, so who governs the wage and hour laws? That would be the United States Department of Labor, specifically their Wage and Hour Division. They do oversee the Fair Labor Standards Act. Also, wage and hour laws are governed by the IRS, and we'll talk about their side of this today. So what is the FLSA? It stands for Fair Labor Standards Act. It was enacted in 1938, back during the Great Depression. And it sets standards for things like minimum wage, overtime, record keeping, and child labor. It is the core of the Department of Labor's Wage and Hour Act. So let's talk about the biggest mistake employers make, and that is classifying employees as independent contractors when they shouldn't be. So misclassification is the top of the list. And who cares, really? What difference does it make? Well, the Department of Labor cares and the IRS cares. And why do they care? Well, we'll talk a little bit about this in detail in a minute, but they care because of the employee benefits that are not being given to independent contractors and the taxes that are not being taken. There are two tests to determine independent contractor status at the federal level. Now, I will tell you that there are certain states in the United States that have their own rules also about independent contractors, and California, of course, is one of them. So if you are in a state that has its own rules, I know that California does. I believe that there may be some legislation in New York, but most of the states that have forward-thinking legislation, employer protecting legislation have different laws, but definitely California. So two tests, there's the IRS control test and there's the Department of Labor test. And as I mentioned, other state level tests, especially in California. We're going to talk today about federal level mistakes. So the IRS has a 3-factor test. It looks at behavioral control, it looks at financial control, and it looks at the relationship of the two parties to determine whether or not that person is an independent contractor or if they should be an employee. First of all, behavioral control means that if this person is an independent contractor, how much right do you have to direct or control the work that they're doing? What work is accomplished and how the work is done? So how much control do you have over that? I'll give you an example of control or not controlling. An independent contractor would be someone who comes in to paint your lobby. You're not going to stand there and tell them how to do it and see, um, have a real involved, unless you're kind of an odd person. But you hire them to paint the lobby. They paint the lobby. You pay them. They leave. That's an independent contractor. You also are looked at, or you look at under behavioral control, you look at the instructions and the training you have to provide to that person. You don't tell the painter how to paint. You don't teach them how to paint. So that is an example of a true independent contractor. The second is financial control. If the facts show that the business has a right to direct or control the financial business aspects of the worker's job, that's one piece of it. And that would come into play by them having unreimbursed business expenses, if they are invested in their facilities or tools that you use to perform the services, the availability of the worker's services to others in the market. They don't just work for you. How your business pays the worker, and the extent to which the worker can realize a profit or a loss. Employees don't realize a profit or a loss. You do reimburse normally business expenses, which you would not do for an independent contractor. And normally the worker, like the painter, invests in a facility or a van and then tools that they use to perform the services. They also paint other lobbies, so they're not just painting yours. The third factor in this test is the relationship of the parties. Is there a written contract describing the relationship? Do you provide the worker with benefits? And how permanent is the relationship? Also, what's the extent to which services performed are a key aspect of your regular business? So if you are a trucking company and you have independent contractors that drive trucks for you, but you also have employees that drive trucks for you, that's a very strong red flag. So if the person is performing services that you normally do as a part of your business, that is a red flag. That's the IRS test. Now let's look at the Department of Labor test because it's a lot different. The DOL test looks at the extent to which services rendered are an integral part of your business. So similar to the IRS. So are they doing what you normally do? How permanent is the relationship? They look at the amount of the contractor's investment in their own facilities and equipment, the nature and degree of control by the company, their opportunity for profit and loss, and the amount of initiative, judgment, or foresight in open market competition with others is required for the success of this independent contractor. So are they in the market competing for more business? They also look at the degree of independent business organization and operation. If they have a business license, they do this work for other companies, and they have an ad that you see on in the telephone book or in the paper or somewhere else on the news every day, then that would make them more of an independent contractor than an employee. They're out there selling their business or services to other companies. So although it has a longer list, it has the same context as the IRS. They're looking at whether you have a permanent relationship with somebody that doesn't work for anyone else. You control everything they do. You train them to do it. And the control that you have or the control that they have over a profit and loss. The penalties under the Department of Labor's laws are very significant. You're looking at back taxes, you're looking at penalties, you're looking at your benefit plan. If they decide that an an independent contractor is really an employee, then you will have to offer that independent contractor the same benefits that you offer your employees retroactively to the time they began working with you. That's kind of tricky because normally an insurance company is not going to let you put them on retroactively. Carriers just don't do that. You would have to put them in your 401k plan retroactively, assume that they'd made the maximum contribution, and calculate earnings on that, plus match. So that would probably be the biggest nightmare of all, is dealing with all of that. The other thing I'll mention here too is that they would have you go and pay back wages to that person, not just back taxes, but back wages, if there were some overtime included. Okay, that's independent contractor, and that's a big topic nowadays because there's a ton of misclassification out there. And I'll let you know that the IRS just hired 100 new auditors. Their goal is to collect money, and they will be charged with particular goals and given a list of companies to audit. And audits can be random. Audits can also arise if you have an employee that leaves and they're disgruntled, or you had an independent contractor that said, I should have been an employee all this time because the IRS is calling on them for taxes. It gets very, very sticky very quickly. So the next mistake we're going to look at, which is also extremely sticky, is the misclassification of exempt status. There are two classifications under the Department of Labor's pay rules. One is exempt and one is non-exempt. Non-exempt means that they're hourly and they are eligible for overtime pay. Exempt means that they're salaried and they're not eligible for overtime pay. Now, that doesn't mean you can't ever pay your exempt people extra for working extra, but it just says it's not required by law. Job titles do not matter. You can put a VP in front of someone's name and it will not make a difference. Employees have to pass a salary basis test and a duties test. The method of payment doesn't matter either. Just because you pay them on a salary basis doesn't make them exempt from overtime. The Department of Labor audits can be random or claim-based, as I mentioned. So they can just walk in your door or let you know they're coming for an audit, or somebody could have complained about something that you've done to them by not paying them overtime or calling them non-exempt or exempt when they should have been non-exempt. There are retroactive fines and penalties and back pay. I want to go back to this slide here before this to let you know. The method of payment and the job titles. The salary basis test, they have to make $684 a week on a federal level, just for example. And there are different classifications. There's administrative exemptions and executive exemptions, computer exemptions, professional, technical, all of those that you have to look at and look at the duties test for the particular job that you're looking at. But the salary basis test federally is $684 a week. That is higher in some states. In California, that comes out to about, I think, $34,000 a year. I had it written down here and forgot to highlight that, but $34,000 a year. In California, the salary basis test for a salaried exempt employee is over $50,000. So pay attention to your state salary basis test also. Okay, The third mistake is calculating overtime incorrectly. This is something that I'm sure a lot of companies do wrong, and that's calculating overtime. You have to use the regular rate of pay when you're calculating what the overtime rate is. The regular rate of pay, before you get ready to add the 1.5 escalation for regular rate of pay, it includes commissions, any piece rate pay, any on-call pay, or any non-discretionary bonuses. All of that has to be added back into the week that they worked in order to determine what the overtime rate is. Let me give you an example of this. Let's just say an employee works 46 hours in a work week and they're paid $12 an hour normally. They receive a $46 bonus. The employer multiplies 46 hours worked by the hourly rate of $12. That's $552. You add the $46 bonus in, that gives you $598. So you take the $598 divided by the 46 hours worked, and that gives you the regular rate of pay, which ends up being $13 an hour. So when you're calculating the overtime rate, you have to multiply 1.5 times $13, not the $12 that they normally make for for their work week. So regular rate of pay includes anything else they were paid during that work week. So here the employee receives $520 in regular wages, $117 in overtime wages, and $637 for the total earnings for the week. But the key here is that overtime rate is the rate that has the extra compensation in it. Mistake number 4, not paying for all time worked. I have companies call me and tell me, this guy worked off the clock and he didn't get his manager's permission and we're not going to pay him for it. Well, that's a violation. All hours worked must be paid regardless of whether you have authorized them or not. If they did it and they weren't supposed to, then unauthorized time worked should be addressed through disciplinary action. If you ever do it again, we will write you up. You will, and X number of these warnings would result in termination, that kind of thing. But it doesn't matter if you've authorized it or not. If somebody takes work home and you find out about it, and this is an hourly person or a non-exempt person, you find out they took some work home and they worked on it a couple of hours, you have to pay them for that and then tell them not to do that again. But you do have to pay them for any time that they work that you are aware of. So it's important in your handbook to make sure that there is an off-the-clock statement that tells them that it would result in disciplinary action. Mistake number 5 is incorrect travel pay time. If someone travels between job sites during the workday, you have to pay them, whether it's authorized or not. Same as before. If they're traveling during the workday, during their normal working hours for you, they have to be paid for that time. If they have an extended commute one morning, let's just say they have to go to a different location, out of the ordinary commuting time should be paid. For example, if their normal commute is 30 minutes and you ask them to visit a client that's 90 minutes away from their home, pay them the difference. And then if they're away for the weekend, an employee's normal work hours generally count as hours worked even on the weekend. If the hours are outside of their normal schedule is free time, you don't need to pay for that. So let's just say they're going to a conference. They're going to be at the conference from 8 to 5. You would pay them for that between 8 and 5. And this is for non-exempt employees that you pay on an hourly basis. Okay, mistake number 7, making unauthorized deductions. This happens a lot. Government mandated deductions don't require an authorization. That is your FICA deductions, your federal taxes, things of that nature. Voluntary deductions, even for employee benefits, require a written authorization. So if someone signs up for your health plan, make sure you have a signature somewhere that says you're authorized to deduct this from my paycheck. Deductions for the benefit of the employer, uniforms, shoes, aprons, etc., may be illegal in your state. You have to check your state law to make sure that you can make those deductions. If you do make those deductions, it does require a signature authorizing it by the employee. But first of all, make sure that you're allowed to deduct for those items. And in any non-government deduction that takes an employee below minimum wage is a violation of the Fair Labor Standard Act because you cannot pay less than minimum wage. So this, looks at garnishments and things of that nature. If a garnishment is going to take that person below minimum wage, you cannot do that. Mistake number 8, not paying for training or meeting time. So when an employee is required to attend a training or a company meeting, then the time has to be paid. It doesn't matter whether it's on the premises or off the premises. You do have to pay them if you require them to be in a particular place at a particular time. Mistake number 9, allowing off the clock time. There have been so many lawsuits about this. A lot of the big box home improvement stores, we won't mention any names, but employees are pressured by their supervisor to work off the clock to finish up taking stuff off of a rack and putting it on another rack, changing the floor plan, whatever. They're off the clock when they're working. This is probably the most frequent complaint to the Department of Labor. Make sure that you have very clear policies and disciplinary action for anyone that does so. If you have a supervisor that's encouraging that, make sure that they know that that is totally against policy and that it could subject them to disciplinary action, even termination. There have been a lot of employees that have gotten mad and quit and gone back and said they made me work 3 hours or 4 hours every week to finish the floor plan or to do some stocking, and I didn't get paid for it. And that opens a class action lawsuit, which you want to stay far, far away from. So don't let anybody work off the clock. And mistake number 10. This happens all the time. I have somebody call me and said, I'm terminating this person, and I'm going to, I gave them some uniforms, I gave them a computer, and if they don't return it, I'm not going to give them their final pay. You can't do that, and you can't deduct it from their pay. Most states do determine the deductions that you can take when an employee terminates, and you cannot ever hold an employee's last check to get your company equipment back or to have them pay you back for something you feel that you are owed because they didn't turn in their uniforms or they damaged something. So unless you have an agreement with an employee in writing that shows that they agreed to pay you back for something if they left the company, and even that's tricky in some states, then you cannot deduct anything from their final pay. So take a look at your state laws, make sure that you're in line with that. So how do you avoid these costly mistakes? Because these claims, if you go on the Department of Labor's website, you don't see anything under 5 figures, and that's low. Normally there's 6-figure claims because it's more than one employee. Department of Labor, when they do file a lawsuit against a company, it's not just for one person. They find a number of people that the employer is doing the same thing with, and so it adds up pretty quickly. And that's how the Department of Labor gets some of their revenue. So develop clear policies on recording time worked and communicate with employees. Use your handbook as a tool for the rules. Ensure that all of your supervisors are trained properly. and then communicate all pay policies with the payroll department for oversight. Now, one of the things I forgot to include on here is what if you've got independent contractors or salaried people that may not be, maybe they shouldn't be salaried, maybe they are non-exempt. You need to go back and pull those job descriptions. You need to look at the rules that tests apply. You can reach out to us at Pay Entry and we can potentially help you, but don't continue doing what you're doing if you're not really clear on whether or not it's correct, because the misclassification is the top thing that's being audited right now. And then the exempt, non-exempt is second. And those are where you're going to get your big claims if you have one. Very, very expensive. So call us if you want more information. There is a lot of information on the DOL's website about this, but we'll be happy to get that for you or help you walk through it. Okay, let's see if we have any questions. I'll open this up. Let's see here. If an employee is hourly and non-exempt, are we required to pay overtime, or is that up to the employer? You are required to pay overtime if the employee is hourly and non-exempt. Yes, you have to pay overtime. It's the law. And what about a part-time exempt employee? Part-time exempt employees are rare. If you want to run that job description by me, I'll be happy to give you my thoughts on it, but that would be, it is very rare that you have a part-time person that is exempt. Could be at a professional level like an attorney or a physician, but not in an admin position. Okay, since we have an employees on call for the weekend, if they are called in to fix something, they're paid for time worked and a flat fee for the call out. Does that fee get included in the time during call outs, put them over into overtime? The fee doesn't cause the overtime. It would be the number of hours that they worked. So let's just say that this person's called out for the weekend and the hours that they work on the weekend put them over 40, then that fee does get added into the calculation of the overtime rate. Okay, let's see here. Regarding time card punches, if an employee forgets to complete their punch in or out, the system doesn't tally their time for the day. We have many employees that consistently forget to punch in and out, and only 2 admins who check time cards. How would you handle this? And how's the best way to handle employees who say they've worked but are missing punches? Well, first of all, somebody needs to review the time cards on a daily or weekly basis before pay time and get the employees to to initial the punch and make sure that it's correct. The other thing you need to do is you need to tell that person that they need to stop it and put them on a written warning, especially if somebody's doing it all the time. That is not allowed, and it is a violation of company policy normally. So they need to understand that this is very serious and that they have to record their time. Okay, and that looks, I think, like all the question here. Nope, here's, does pay entry calculate overtime when adding hours with the bonus, or is this something the employer would have to manually do? That's a very good question. If you have bonuses and commissions and things like that, talk to your client advocate, because there is a piece that needs to be added to the system in order for it to calculate the overtime correctly. So you do need to talk to your client advocate and have that put in your system to effectively add that back in before overtime is calculated. So our system can do it, but you need to have that set up. Okay, all right, those were very good questions, and I'm glad you asked those because that adds to it. I want to thank you for coming today. If you need me or you need help with deciding any of this stuff, please reach out to me, cgraham@payentry.com or hrservices@payentry.com. We would love to help you with your HR needs, and we will see you next week. Thanks for attending.